Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 6th of January. NFP preview, what to watch out for. The main event today will be the release of the US employment report for December. Non-farm payrolls are expected to have risen by 178K, exactly as much as in November. The unemployment rate is forecast to have ticked up to 4.7% from 4.6% previously, while average hourly earnings are expected to have risen in monthly terms, following an unexpected decline in November. Despite a potential increase in the unemployment rate, the overall report points to another month of tightening in the jobs market. Such consistent employment gains could enhance the case that the US economy continues to perform well and may thereby bring the dollar under renewed buying pressure. Euro-dollar edged north yesterday, but the advance was stopped at 1.0615. A solid report could encourage the bears to take advantage of that resistance and push the rate back down for a test near the 1.05 territory. If they prove strong enough to overcome 1.05, then we may experience extensions towards our next support of 1.0435. Having said that, we believe that the risks surrounding the dollar's reaction from this jobs report may be asymmetrical, with a potential negative surprise likely to generate a bigger market impact than the corresponding positive one. A solid report that is more or less in line with the forecasts would simply confirm what we already know, that the data support the Fed to continue normalization in 2017 at the pace currently anticipated. On the other hand, a report that falls well short of expectations could generate concerns that the pace of rate hikes may not be as fast as currently envisioned. Thus, a soft report could push back expectations for the next hike and potentially lead to notable profit-taking in the greenback. Euro-dollar could emerge above 1.0615 and possibly target the 1.0685 resistance. Another break above that level is likely to see scope for extensions towards the key resistance zone of 1.08. As for the rest of today's highlights, during the European day we get Germany's industrial production and Eurozone's retail sales, both for November. Nevertheless, neither of these indicators is usually a major market mover. Besides the US employment report, we get December jobs data from Canada as well. The forecast is for the unemployment rate to have risen and for the net change in employment to have turned negative, albeit marginally. Coming on top of a slowdown in the nation's core CPI for November, such a setback in the labour market would be further discouraging news for the Bank of Canada. Even though Governor Paulos said recently that it would take an economic shock for the bank to ease again, continued softness in key economic indicators could gradually lead investors to price in some probability for a Bank of Canada rate cut in 2017. Given that the US and Canadian jobs reports are released at the same time, and the former is expected to be solid while the latter soft, we could see dollar CAD recover some of its recent losses. If this is the case, dollar CAD could emerge above the 132.60 resistance line, something that could set the stage for our next resistance of 133.15 and the downside resistance line taken from the peak of the 20th of December. We also get Canada's IV PMI for December. We have two speakers scheduled for today, Chicago Fed President Charles Evans and Dallas Fed President Robert Kaplan. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.